Putting it all into context. So understanding the difference between the higher time frame and lower time frame trends or levels allows you to make better trades. You'll be able to plan for better entries and exits as shown in the previous video. If this high time frame level does its job, where could price go? What's the next high time frame level or zone? We want to think ahead, right? We know where price is now. We know where price has come from. We want to use all that information of what has happened before and where price has come from to inform where price is going to go from where it currently is. We also want to avoid low probability trades. Understanding the high time frame or low time frame relationship will help you stop longing at high time frame resistance in a high time frame downtrend, and it'll help you stop shorting at high time frame support in a high time frame uptrend. I find that most people are not guilty of shorting high time frame support in an uptrend. Most people are guilty of longing or buying the dip at high time frame resistance in a high time frame downtrend, right? There's a brief relief rally, and people get excited, right? Especially if prices has been in some sort of downtrend and there's been a deterioration in the market, people get excited when there's a bit of a relief rally and price goes up maybe 5 or 10% on Bitcoin. Typically, they'll see that happen. They'll see the green, that 7% green, and they'll see the market green, and they'll say, "All right, I want to jump in. I can't miss out." They get that FOMO, that fear of missing out, and they end up longing at resistance, right? Because price is already at that resistance level, that high time frame, or it's nearing it, and the overall market structure is downwards, and it ends up being a losing trade. We also want to refine our price level selection process. You can analyze price action in relation to key high time frame support and resistance zones, as opposed to insignificant lower time frame levels that aren't as important in the grand scheme of things. We always want to keep the higher time frame levels and support and resistance zones in mind, and understand and know that they have much more dominance over where the market can and will go, as opposed to the lower time frame levels, such as that 5-minute level, which generally is fairly insignificant in the grand scheme of things. Here are some considerations. Higher time frame levels or market structures, trends, they require much more patience and time to play out. There's no need to only select one time frame. I only trade the 1 hour. I only trade the 15. Don't put yourself in a box. There's no need to. Lower time frame closes at high time frame levels are not always reliable. It could result in selling the bottom or buying the top of a trend. We want to wait. If we're looking at higher time frame levels, we want to see higher time frame confirmation or signs of invalidation or some sort of reversal occur on the higher time frames, not necessarily on the lower time frames. The lower time frames can lead you to start to look for those higher time frame shifts in the market structure, but I would not use a lower time frame candle close or a lower time frame pattern close to give credence to a overall higher time frame market shift. Now, going along with that, lower time frame analysis of higher time frames will generate false signals. You don't want to front run higher time frame levels using lower time frame closes. Don't rush the price action. Wait for confirmation on higher time frames if price is at a higher time frame level. We also want to make sure that we are not assuming that price must turn exactly at a level for it to remain valid. If price is falling below or above a level, it does not mean it's always broken or that the idea is invalidated. So here's an example of a weekly chart, and let's say there's some sort of weekly bearish market structure. Prices are coming down, and here's our 1 week level of support. So price is coming down, Price falls below. So remember, here is our candle open on a candle close, open, close, or open, or close. If the candle's red, the open is at the top and the close is at the bottom, right? So on this green candle, price opened here. Price continued to fall, and even though this candle is green, price continued to fall below support, but it does not invalidate the level as it's just the wick. A lot could be happening in here. In this situation, support does its job as the price rebounds, and the 1 week candle closes above support. Price opens at this bottom because it's a green candle now. It came down, and at some point this was still a red candle, right? The price opened here and it came down. This is a big fat red candle, but it did not close yet. We want to see the weekly close, especially on these higher time frames. We have to wait an entire week. We have to wait a much longer time period to really see how the market plays out at these key levels, at these key structure levels. In this situation, price actually came back up to its open and continued upwards, and the candle shifted from red to green and even came up even higher here, and before continuing and signaling some sort of market shift. So just because price came below this 1 week support level does not necessarily invalidate the level. This is an important time to really start watching and looking at other indicators, other indications, or analysis methods that you may employ to really see where price could go, tracking volume on the lower time frames to really help inform, well, could this candle close below the weekly support? If it does, that's a different story. In this situation, the wick fell below, but the support level did its job. It held true. Now here's another example of this found on Bitcoin, US dollar. This is on the weekly chart. Here we see the 42,000 Bitcoin price level acting as crucial support or resistance on the 1 week chart. So here is our 42K. This is 41,986. It's basically 42K. And we do see several instances of wicks protruding, reaching to, or falling below, but generally the price held true, whether this acted as a form of resistance. So price came up here. This is in January 2021. Price came up and was rejected from there. We see price eventually would overcome and continue. In March, price fell down. This 42 support level held true. Price fell down and capitulated throughout June and July, and we do see price nearing the wick, neared it, but ultimately was rejected. We also see in September, this is a really great example here, the wicks of the price of the candles fell below the 42K level, right? The wicks actually came below, but overall we did not see a candle body close below this level. So it could have been inferred that this could have been a sign of a deterioration, a sign that this market structure shift was short-lived and that this bear trend would continue on, that maybe this was some sort of short relief rally, an extended relief rally up into September, but ultimately the candles failed to close significantly below this 42K level, and it held through notably in this situation. Now, in regards to trade management and time frames, beginners typically are impatient at levels, especially higher time frames, and they'll look for any excuse to enter a trade. A lot of people just want to be in a trade regardless of their reasoning why, even if there isn't a valid position or a valid trade idea present at the time. Either they want to be involved in the market in some form, they want to just FOMO in, or they want to make a free trade and let it run just to see where it goes. And that's just basically gambling, where you have no trade idea, you have no risk management, you just throw the money in and see where it goes. That's literally gambling. So trade idea invalidation will most strongly show on the time frame that the trade idea is derived from. So if you're buying Bitcoin at a key daily level and you're seeing a 1 hour candle close below, that's not a strong indication that the trade idea has failed. Just because that 1 hour candle closed below that key daily support level doesn't mean that, oh, that's it, it's a downtrend now, the support isn't going to hold. We need to see confirmation on the daily structure on the higher time frame if our trade idea is derived on the daily structure. Now, being hands off on higher time frame based trades is a skill. In this instance, patience is key. It's key to wait out and consider that we're waiting days and weeks or several hours on these higher time frame trades. If you're overly worried in any trade, especially on these higher time frames, if you're worried about your capital, oh man, I have 10 grand, in a week-long trade, and if it's really stressing you out, that means you're overly leveraged or overexposed, regardless of their time frame. In this situation, it's advised that you reduce your position until you're comfortable in your strategy to add more. If you're not comfortable, if you're worried you can't sleep at night, you're over leveraged, you're overexposed. Now, managing a trade on the same time frame that the idea was derived from or close to it is key, right? So if you have an idea on that 1 hour time frame, you want to manage that trade on the 1 hour time frame. Now, in regards to the higher time frames, because we're talking about the 1 hour, you have this idea on the 1